amongst other things that they have done, they have manufactured critical components for India's first nuclear submarine, the maiden moon mission Chandrayaan-1, first intercontinental ballistic missile Agni-5, and probably a lot more. The stock is up 8.5% today. They've turned profitable after a few quarters as well. Mr. G.K. Pillai, MD and CEO of Walchandnagar Industries, joins us on the phone line. Good having you, Mr. Pillai. Thanks so much for joining in. Now, tell us, what does this mean for the sector as a whole? Because I heard a few other companies in the defense space say that this move was long overdue.
Absolutely. First of all, good morning to all of you. Definitely, this is a very welcome move, which we are all wanting this to happen in the Indian defense manufacturing sector. The country has been importing a lot of defense equipment for over the years, and thereby keeping the manufacturing industries who are in the defense field almost starving for a long time. This move will definitely help us. It will not only help the industry, it will also help the country. So we, at least I, on behalf of Walchandnagar, as well as many of the other defense manufacturers, will definitely welcome this move.
Right.
Yeah.
Mr. Pillai, if you can give us a sense of, in terms of either strategic or financial investors who've been in touch with you possibly in the past, maybe firstly, if you can tell us if you're in conversation with anyone currently. If not currently, have there been any feelers? Do you think, what sort of interest can this move generate for companies like yours?
Well, there has been an interest over the last couple of days, with regard to the inflow of FDI into the defense sector. We have also been getting some feelers from various quarters that whether we would be happy to partner with many of the foreign manufacturers. And that's really a welcome sign, because what we have been doing mainly in the defense sector in the country is through the local indigenous DRDO development work, which takes a long time. For the gestation period is pretty long. So what we really need today is many of the defense latest equipments which are there available in the world to set up the shops, the technology in India with partnership with the Indian manufacturers. So on the whole, until and unless we do the manufacturing in India, the complete the defense sector can't prosper and can't succeed. So one of the drawbacks what happens is, if you only import the items, we are always starving for spare parts. We are always having a problem for the spares for the equipment. And that's the way many of the foreign companies have been handling India.
Mr. Pillai, my question is, and we'll come to how your business is, because I see that you've turned around in the quarter gone by as well. But just one quick question, and correct me if I'm wrong here. Your promoter holding is at 42%, and I believe foreign corporate bodies hold around 13% in the company as well. How much would the promoter entities be willing to let their stake go down to if indeed you get a foreign investment proposal?
Incidentally, the promoter's quota is 55%, not 42%.
13. I believe 13% is foreign promoters, if I'm not wrong.
Yeah, again, it's a part of the same promoter family. So the promoter's quota is almost 55%. Now, that's a very important point. What we are looking at, see, Walchandnagar per se as an industry, as a company, has got a lot of various verticals. We are into the sugar, into the boilers, into the cement, defense space, etc. So there could be modalities where we can even have hive off and put up a separate joint venture for the defense sector. Because as far as we are concerned, the technologies, manufacturing expertise is available with us. We've got a good R&D facilities. So if we partner the right persons, we should be able to put up even a separate joint venture only for the defense side.
So then, Mr. Pillai, can you give us a sense of how, how much of the revenues flow in from the defense sector for not just this quarter, but, if you take a couple of quarters, if you just average it out on the whole, how much of the revenue breakup is from defense only?
See, as far as we are concerned, about 25% of our revenues come from the defense sector, defense and defense-related sector. And we feel that we should be able to increase it substantially if, the defense industry is able to get more equipment from the local manufacturers.
Right. So if we just see the last couple of quarters, for the March quarters, of course, the profits were at around 21 crores. But over the last couple of quarters, we've had losses of about 33 crores, about 19 crores on an average. With greater focus on the defense area, possibly, do you think this, this profitability can be maintained, or what would you attribute the losses that had been accumulating over the last couple of quarters?
Well, one of the reasons for the losses for the previous quarters has been, there has been a lull in terms of our traditional business, that is the sugar and cogent power. That was one, because those businesses we were executing long gestation period orders, which were really creating, which was, many of the projects were delayed by 4 or 5 years on account of various other reasons, which resulted in a loss. Second reason of those losses were mainly basically on account of many other projects which were ready. The customers were, there was a slowdown in the manufacturing sector, so the products were not going out. But answering your question about the defense, how the defense or the improvement in the defense sector will increase the profitability, I'm very confident that this is one area. This and nuclear will be two areas which will really propel the company into a steady profitability growth.
That's very encouraging to, I'm sure, all the investors as well. But Mr. Pillai, before we let you go, I just wanted to get a sense on two factors right now. What is the current order book size? How much of it is contributed by defense? And secondly, for the next year, that's very encouraging to, I'm sure, all the investors as well. But Mr. Pillai, before we let you go, I just wanted to get a sense on two factors right now. What is the current order book size? How much of it is contributed by defense? And secondly, for the next year, what can investors be expecting in terms of the top line growth from the company as well as the bottom line?
In terms of the present order book position, we are almost having about 16 to 1700 crores of order book as on date. Sales is almost likely to be about 900 crores. So that is one. In terms of profitability, we are confident we should be able to maintain the same level, though there are a lot of pressures there in terms of cash flow. The last couple of quarters, one of the reasons has been there has been no inflow of capital at all. The cash flow situation has been absolutely, very, very difficult. So, but I'm very positive. I'm very hopeful that with the new government coming in place, there will be just some sort of a cap on the manufacturing sector was there, which will go away, and Walchandnagar industries will definitely prosper and will have better results in the quarters ahead.
We wish you all the best for that, Mr. Pillai. Thanks so much for taking the time out and being with us and giving us that view. The stock was anyways up, but after the management has spoken, it's locked on an upper circuit. What's locked on a down circuit is J&K Bank, It's actually just off the lower circuit, but did hit those levels in the last 5 minutes of trade. So that one is under serious pressure, J&K Bank. That's probably the top newsmaker at this hour. Nevertheless, let's take that quick break, come back, get in Prakash and Sandeep with their stock recommendations for the day. Also get in HSIL, not the best of numbers, but Reliance